Welcome to the second in a series of presentations addressing the Australian R&D Tax Incentive. Welcome back, and in this presentation I'm going to be discussing eligible R&D as defined under the Australian R&D Tax Incentive. As with all of these presentations, I have used my best endeavours to provide accurate information with respect to the Australian Government's tax incentive for research and development. But please understand that over time, rules and regulations may change, and thus you should consult business.gov.au for any updates or changes with respect to the Australian Government's research and development activities. In working to explain the nature of eligible R&D under the Australian Government's R&D tax incentive, I have consulted the Industry Research and Development Act, the Income Tax Assessment Act, relevant cases from the Administrative Appeals Tribunal of Australia, and the Federal Court of Australia. Understanding eligible R&D is not always simple. This is the type of definitions that AusIndustry would provide to you when you ask them about eligible R&D. So basically, an eligible R&D activity is a project that aims eligible R&D is a project that has activities that aim to find new and novel outcomes to technical problems for the generation of new knowledge. The work is based on original and non-obvious concepts and involves uncertainty about the outcome. That is, there must be an element of technical risk associated with the project to fit within the guidelines of eligible R&D. In addition to creating new knowledge, there must be systematic work that is planned, budgeted, and carried out in a scientific method. There must be work that is planned and budgeted and undertaken in a systematic manner. The results cannot be random and must be able to be reproduced. And importantly, the new knowledge that is generated needs to belong to the company that is invested in the R&D. Thus, if you undertake R&D for another company and are paid for that R&D, and you do not own the outcome, that is, the information or knowledge is transferred to the company paying for the R&D, they are eligible for the R&D tax incentive, not the company undertaking paid R&D work. To put that into a sentence, eligible activity can be defined as systematic progression of work that is based on the principles established in science and proceeds from a hypothesis to experiment, observation, and evaluation, and leads to a logical conclusion. Now, to many in industry, this sounds incredibly technically complex and more akin to what would happen within a university or CSIRO. But this is not the case, and I would like to spend some time to explain the type of R&D activities that would be eligible within the R&D tax incentive as applies to a company. Let me start by explaining a few terms. If we think about research and development, it can be broken up into 4 distinct headings, although clearly there are overlaps between each. There is basic research, and this is the type of research that is undertaken within universities and institutes of higher learning. And this is where research is undertaken to create new knowledge through discovery. The basic principle is just finding out new things that may or may not be useful in the future. Applied research is a development on from basic research, where there is new knowledge generated with a specific aim or objective. For example, some of the early work done using lasers was applied research looking at the use and application of this new wonderful laser technology that has led through to today, where we see fibre optics, for example, as a major element within industry. Beyond applied research, we have experimental development. And experimental development is usually what happens within a commercial environment. This is an environment where you're creating new knowledge through research that is directed at the creation of a new product or process. This needs to be differentiated from straight development, which builds new products using existing knowledge. Let me try and explain the difference between experimental development and development. Here I use an example of a paint company. On the left, we see a process of product development. The marketing department comes to the R&D department and says they have discovered a demand for heritage colours for the painting of houses. They asked the technical team within R&D to develop a range of new paint products with a heritage colour scheme. The team gets to work taking existing colours, blending them into existing paint base to create new colours. There is a lot of work in blending and experimentation to create new colour combinations. But intrinsically, there is no new knowledge being generated in this product development process. It is being developed on the back of what is known. So a new product range is created and launched to the market. 12 months later, the marketing department comes back to R&D and says they're having a problem with red-based colours that are fading on exposure to the sun, and ask the R&D department to do something about it. In this situation, we see the work of experimental development. The chemists within the R&D department get to work to create a number of new red dyes that are more resistant to UV radiation. Through systematic experiments, they come up with a number of candidate products that are blended together with an existing base and other existing colours through an experimental process to see, does the product stand up to UV light? Are there any interactions between the various chemical elements within the paint that are not compatible? And ultimately, can they create a product that meets the requirements of the market? In this process, there is technical risk. Some of the chemical elements will not stand up to UV radiation. Some of the chemical elements may react adversely with other elements within the paint product. All of this represents technical uncertainty, and thus the experimental development would be eligible under the R&D tax incentive, whereas the primary product development is not. The fundamental question that is asked is, where is new knowledge being generated in a systematic scientific process? One of the concepts, ideas, or indeed hypotheses being tested is that the paint company can develop a chemical combination that resists UV irradiation and will be sustainable as a product on a building for at least 10 years. The hypothesis is not addressing a fundamental question in quantum mechanics or astronomy. Having provided this overview of eligible R&D, let's now look at a number of terms used within Aus industry to classify R&D. There are two important terms used within the R&D tax incentive, and these are the terms core activity and supporting activity. And if you are claiming the R&D tax incentives, these will become part of your everyday nomenclature. It is expected that each R&D project must have at least one core activity and would be expected to have at least one supporting activity to be eligible under the R&D tax incentive. Thus, if we consider a project, we would see that underneath a project you would have these core and supporting activities. And I emphasize here that the focus of the R&D tax incentive is very much on these activities. So it is important to spend some time defining these two terms. So let's have a look at defining what is a core R&D activity. We can define a core activity as something that generates results from the testing of a hypothesis, that being a well-developed idea or concept. Again, do not let the word hypothesis get in the way of understanding that really what the government is seeking is that there is a well-developed idea and concept that can be tested systematically in an appropriate technological or scientific manner appropriate to your industry. I would like to note here that many projects run over several years, and thus any given core activity does not have to occur in every year that you may claim the R&D tax incentive in relation to one complete project. Thus, in 1 year, you may be spending most of your time and capital on supporting activities, getting ready to undertake the core activity in a following or subsequent financial year. So let's move directly to an explanation of a core activity. This schematic is adapted from information provided directly by Aus Industry, and we're going to start on the left-hand side at the bottom of the column. So the first question that is asked is, was an experiment or a set of related experiments carried out? Please note that experiment tends to relate in our minds to work that's undertaken in university or CSIRO laboratories where fundamental chemistry, biology, physics is being undertaken. But for the purpose of the R&D tax incentive, it is that a systematic set of work, studies are carried out with respect to the R&D tax incentive moving towards product development and the generation of new knowledge. So having determined that a set of experiments is being undertaken, the next box asks the question, could the outcome of this experiment or related experiments have been known in advance? In other words, someone skilled in the art is not able to just look at a problem and solve it from existing knowledge. That is, experiments or testing needs to be undertaken to determine an outcome. The next box is, did the experimental activities employ a scientific method? And again, you need to relate this to the standards of the industry in which you work. Thus, an engineering company would undertake a different type of experimental protocol to that of a chemical company or a pharmaceutical company. Thus, for an engineering company, for example, it would be expected that a set of protocols would be developed that could systematically address the technical question that is being solved through the R&D activities, and that the purpose of this work is the generation of new knowledge. Such new knowledge could be the application of a new material to, say, the construction industry, where systematic research and development needs to be undertaken to show that this new material meets the requirements of the building industry and can be used safely, economically, and effectively for the purpose of construction. On the right-hand side of the schema, we see a number of technical issues being addressed. At the top, we see the question, is the activity on the core R&D activity exclusion list? Industry publishes a list of activities that are specifically excluded from being core R&D activities. These include, for example, elements of social science, the debugging of a computer program, and other activities that are not deemed to be scientific and technical in nature. Underneath this is a question as to whether the activity was conducted in Australia or overseas. And you may recall from my first presentation a discussion of advanced findings and overseas findings. Thus, if an activity was conducted external to Australia, it is essential that an advance finding be submitted in the year that the activity is undertaken without an advanced overseas finding. The R&D expenditure conducted offshore cannot be claimed as a core R&D activity within the financial year. Having discussed what a core activity is with respect to the R&D tax incentive, let's now have a look at the definition of a supporting R&D activity. In this schematic, again, adopted from adapted from information provided by Industry, we start at the top left. So the first question is, have you identified the core activity within the project? If you haven't identified a core activity, you should do that before you proceed with supporting activities. The next box down asks, is the activity excluded from being a core R&D activity or one that produces or is directly related to producing a good or service? An activity that is excluded from being a core R&D activity may be a supporting R&D activity if it is directly related to a valid core R&D activity that is not on the exclusion list. With respect to activities related to the production of goods and services, it is possible to claim these as supporting activities where it can be determined that the dominant purpose of the activity was to support a core R&D activity. And I will speak more about dominant purpose further on in this presentation. As with the core R&D activities, there is a question with respect to where the work was undertaken, either in Australia or in an external territory. And again, the rules with respect to overseas finding come into play. Now, this may appear somewhat complex, so let me present a simplified schematic. If we think about the core research activities, those are the ones that are central to the testing of the new idea or concept that is technically risky and aims to generate new knowledge in the development of a new product or process. Underpinning the core research activities are a range of other activities that, if directly related or for the dominant purpose of supporting the core R&D activities, may be classified as supporting. These include things such as a prior art assessment that I shall discuss in another presentation, planning, preparation, logistics, non-experimental testing, and a range of other activities that underpin the work that is essential in the core activity. Now, in most businesses, there is no discrete differentiation between what the department calls core and supporting activities. However, because of the need to define where new knowledge is created, it is important to be able to differentiate within your records the difference between the core and supporting activities if you are claiming the R&D tax incentive. If these differences are not clear to you following this brief introduction, I would suggest that you go to the business.gov.au website and look up the R&D tax incentive and read the definitions of core and supporting activities and the other information which is provided there, or consult with your registered tax agent specialising in R&D. Now, I mentioned two terms as we were coming through this explanation of core and supporting activities, these being the relationship between supporting and core activities, either directly related or for the dominant purpose. Directly related is fairly straightforward. This is work that is undertaken to support a core activity, and if that work is not undertaken, the core activity would not proceed. They are directly related. Dominant purpose is a question that is asked with respect to activities that may be undertaken in part involving normal business processes, and thus a supporting activity that is undertaken where the prevailing or most influential purpose of that activity was to support a core R&D activity and generate new knowledge. Let me try and explain this by way of an example. A company is developing a new electronic chip that is going into their product. As part of the experimental elements, they need to manufacture a number of products that incorporate the experimental chip. So they produce 1,000 machines incorporating the new chip through their production line. As a result, they claim some of the expenditure related to the running of that assembly line as a deduction under the R&D tax incentive as a supporting activity for the core experimental work related to testing the new knowledge generated by the new to the world chip that the R&D team has created. The dominant purpose for producing these machines on the production line is R&D, not the production of a product for sale. While we are discussing such terminology, let's have a look at some related definitions that may be important to you in claiming the R&D tax incentive. I mentioned in a previous presentation two terms, clawback adjustment and feedstock adjustment. With respect to clawback adjustments, this is where the level of incentive is reduced where the company has received a grant from an Australian government to support the R&D project. The principle at work here is that the government does not wish to be providing both grant support as well as allowing the company to claim a benefit from that grant in addition under the R&D tax incentive. Without going into the full technical details of the process of the clawback adjustment, it is approximately a reduction of 10% in the benefit that flows to the company under the R&D tax incentive. The presence of the clawback adjustment does not necessarily negate the benefit of claiming R&D under the R&D tax incentive, even where a grant may have been received. And this should be discussed with your registered tax agent with respect to your particular company. A feedstock adjustment is a different type of adjustment to the clawback adjustment. In the previous example, we talked about supporting activities where product was produced on a production line for use in the R&D, assessing the performance of a new-to-the-world chip incorporated into the product. At the end of that process, the company may, for example, sell these machines to enthusiasts to see how they perform in different environments. Or indeed, they may sell the machines as scrap and waste to a recycling organisation. If in this process they receive some payment, then the feedstock adjustment rule will come into effect. Under this rule, the value of the R&D tax incentive is reduced by a percentage of the value of either the raw materials used in producing the product or the price of the product when sold, whichever is lesser. Again, the feedstock adjustment does not negate the benefit of claiming the R&D tax incentive for eligible R&D activities. That brings me to the end of this presentation. In the next presentation, we'll be discussing planning, execution, and record keeping with respect to the R&D tax incentive. I trust that the information provided helps you understand a little better the meaning of eligible R&D activities and some of the terminology used within AUS industry. If you have any questions or comments, please feel free to email at the address shown. And if this presentation has been of use to you, please subscribe by clicking the subscribe button below.